This is the Asia Trade. I'm Paul Allen in Sydney, where markets have just opened.
I'm Haidi Stroud-Watts. The top stories this hour. Asian stocks are set to get a tailwind from tech-led gains on Wall Street. The dollar trimming losses as Donald Trump denies he'll scale back his tariff plans. The US 30-year yield touching a 14-month high.
Justin Trudeau to step down as Canadian Prime Minister after 9 years amid weak poll numbers and a rebellion within his own party.
Also ahead, Tencent says the US has made a mistake by labelling it a Chinese military company as its New York listed shares slide.
And I'm Stephen Engel outside the presidential residence in central Seoul, where the political standoff continues. This as America's top diplomat visiting Seoul expresses confidence in South Korean democracy.
Well, certainly this is proving to be a test of democracies around the world, and we do have Steve there on the ground monitoring what could be another eventful day, right? As Steve mentioned, we have the corruption investigators seeking an extension to the arrest warrant. They've failed to arrest President Yoon so far, right? And it's sort of turned into this ongoing standoff. The police have also declined to handle the execution of the warrant as well. At the same time, there's all these other things happening. Antony Blinken is in the region. North Korea firing a ballistic missile, as they tend to do during these sensitive sort of diplomatic visits and events. And, you know, on the other side of the world, we're watching the drama play out in Canada with Justin Trudeau quitting after 9 years in power. The Liberal Party now sort of in revolt, and they're facing just simply dreadful polls, you know, after many, many months of diminishing popularity for Trudeau. There's a rebellion within the party. We've had key individuals quitting. In terms of a successor, this leadership contest that we're watching, there's several pretty high-profile candidates that we're watching closely. Chrystia Freeland, Mark Carney could be one of them, but really a very, very difficult task for who the next Prime Minister, potentially the next Prime Minister, is going to be as that democratic process begins for the National Board. Yeah,
we did at least have a peaceful certification of the US election result, which is not what we can say about what happened 4 years ago. So business as usual there. Business as usual for the Fed as well. We've heard from another speaker, Lisa Cook, of course, and she's really echoed these remarks from Mary Daly and Adriana Kugler that we heard yesterday about, look, we're in no rush. Inflation's still sticky. Markets are still pricing in 2 cuts this year, but the Fed's in no rush to satisfy them. Let's hear what she had to say.
Since September, the labor market has been somewhat more resilient, while inflation has been stickier than I assumed at the time. Thus, I think we can afford to proceed more cautiously with further cuts.
Well, let's take a look at how US assets are faring. It was a pretty good day for the S&P, technology higher again as well. The dollar trimmed losses after incoming President Trump denied a Washington Post report that he was considering paring back tariff plans. But a lot of the action was in the bond market. We saw yields climb, especially for longer dated notes. As Haidi mentioned there, the 30-year hitting a 14-month high. The yield on the 30-year note up 5 basis points. There's a lot of US debt hitting the market. That's really weighing on bonds. We had the 10-year yield up 50 basis points in the last month, and that's Bloomberg's question of the day today, actually. When's that 10-year yield going to hit 5%? If we take a look at the oil price as well, a little bit softer. Bank of America sees Brent averaging $65 a barrel this year, with the new oil production from non-OPEC countries outstripping growth in consumption, Heidi.
Yeah, take a look, Paul, at how we're setting up when it comes to just the first minutes of trade here in Australia. There's a few that we're watching, but we are expecting that sort of fair value to futures gain of about 0.5%, just shy of 0.5% as that comes online there. We have seen that kind of renewed wave of dip buying, sending further highs in US stocks, and that could sort of pass through to some positivity in this part of the world as well. Watching still some of those wine and alcohol beverage related stocks in Asia, including the likes of Treasury Wine in Australia as well. We saw a bit of a reaction, the declines across some of the beer and liquor and winemakers after that US warning on cancer being linked to alcohol consumption. So that's one to watch. Chicago Nikkei futures looking pretty muted, but about 0.2% higher. It was a bit of a challenging start to the year when it comes to the yen. It's at 157 at the moment, but we saw weakness of almost 0.5% as Tokyo traders reacted to pretty strong US eco data early in the holiday season, and we could see further weakening in the yen ahead of the jobs numbers on Friday from the US as well. Strategists looking at that window between 158 to 160, which of course takes us potentially into intervention territory, or at least intervention watch territory as well. A bit challenging when it comes to the yuan as well. We had authorities at the BOC pushing back against the weakness in the currency after the slide that we had last week. Just that reaffirmation, I should say, of support for the yuan as well. That stronger daily reference rate, which is suddenly very relevant again, and the plan to sell more bills in Hong Kong to stabilise the currency there as well. So there's a lot going on, Paul, but certainly to start off the year, we've got quite a high degree of political turmoil.
Yeah, a lot of news flow on that front, and Canadian Prime Minister Justin Trudeau, as we've been reporting, resigning after more than 9 years in power. He's bowing to sagging approval numbers and a rebellion within his Liberal Party.
I intend to resign as party leader, as Prime Minister, after the party selects its next leader through a robust, nationwide, competitive process. Last night, I asked the President of the Liberal Party to begin that process. This country deserves a real choice in the next election, and it has become clear to me that if I'm having to fight internal battles, I cannot be the best option in that election.
Well, for more, Bloomberg's Vancouver Bureau Chief Thomas Seoul joins us now. So, Thomas, the process to select a new leader of the Liberal Party to begin very soon. Who's that leader likely to be, and what sort of a task are they going to have facing an election later this year?
Hi, yeah, it's a surprisingly competitive-looking field at this early stage, considering whoever wins is going to be coming in 20 points behind the Conservative leader Pierre Poilievre. There are various names that are in the mix now. One of them, Chrystia Freeland, who was the Deputy Prime Minister to Trudeau and his Finance Minister, really his closest ally for many years, but triggered this latest crisis in December when she resigned instead of delivering a financial statement on December 16th. Another name in the mix, widely reported, and someone whom Trudeau had tried to recruit into the government, is Mark Carney, the former Governor of the Bank of Canada and the Bank of England, now an executive. He's the chairman at Brookfield and chairman of Bloomberg Inc. Also, various other members of Trudeau's cabinet, so his now replacement finance minister, Dominic LeBlanc, a man who was his childhood friend, and some slightly more outsidery names like the former Premier of British Columbia, where I am, the west coast of Canada, Christy Clark. So we're going to see a much faster leadership race than last time around when Trudeau was selected over 10 years ago. That process took over a year. You know, they have weeks this time around because, in 3 weeks, less than 3 weeks, Donald Trump is taking office as in the White House.
Let's talk a little bit about, what we've seen from Justin Trudeau. In our write-up, I love this line, backed by a famous name and a skill for retail politics. At what point, did this kind of destiny, that he was always sort of predestined for the political arena, did that seem not enough? Because this sort of lack of support has been diminishing for months now.
Yeah, he swept to power. He rejuvenated his party's fortunes, and in that he earned a great degree of loyalty and trust. But I think at least 18 months ago, things really started to turn against him, and it's a story we've seen around the world with inflation just battering incumbents' popularity. If you see prices for household goods, fuel, rent go up by a cumulative 15, 20, 30%. You're going to take some of the blame, whether that's entirely fair or not. Interest rates, another part of that story. And he's really tried to shake that off with various measures to soften the cost of living, but it's not seemingly had an effect on the polls. At the same time, he faces a very focused opponent, this Pierre Poilievre, who, the polls indicate is the likely next Prime Minister of Canada. And he's relentlessly attacked Trudeau on how, allegedly these policies of Trudeau's have actually exacerbated the cost of living crisis here.
Bloomberg's Vancouver Bureau Chief Thomas Seoul there. Well, US President-elect Donald Trump has denied a report that his aides are considering narrowing his tariff plans so it would only apply to limited specific critical imports. For more, let's bring in Bloomberg's political news director Jody Schneider. And Jody, what do we know in terms of the latest back and forth over President-elect Trump's plans to impose tariffs? Because obviously there's a degree of uncertainty in terms of what was spoken of on the campaign trail and what might actually be put into execution.
Yeah, Heidi, it seems that incoming President Trump wants there to be some sort of mystery around the specific details of how he is going to impose tariffs, or how he wants to impose tariffs. He has stood by tariffs as being a mechanism he will almost certainly deploy in his second term, but he has been, somewhat mysterious and often changing his tone on what we're talking about specifically. He had talked about on the campaign trail, as you note, 10 to 20% tariffs, across the board tariffs, and as high as perhaps 60% on Chinese imported goods. Today there was that report in the Washington Post that said, well, perhaps he was mulling over a different strategy with tariffs that would impose them universally on all countries, but then only in certain industries, in certain sectors. And then we heard from President Trump, incoming President Trump, who said, well, not so fast. I am not giving up on tariffs. I stand by my plan to use them. So it seems that in this, he's trying to have some negotiating posture as to how severe and just what form these tariffs might take, while making it abundantly clear that tariffs will be part of his economic and foreign policy.
Yeah, Jody, is this uncertainty, this mystery, central to Donald Trump's economic and foreign policy?
Yeah, I think it is, Paul. One of the things that he has been clear about is he views tariffs as not just an economic tool, but a tool on the worldwide stage to get what he thinks the United States deserves in terms of economic strength and foreign policy negotiating. For instance, he sees tariffs as a way to increase revenue, to raise revenue for the U.S., even though economists are split over whether this will actually be the case. Also, he sees it as a way to restore American manufacturing, and also to get other countries really to hew to his agenda in terms of economic policy, that the U.S. won't follow what their game plan is, but instead will make them come to the U.S. Again, there's a lot of debate over both the economics and the foreign policy strategy of this. But at the same time, we saw President Biden keep tariffs when he took over. Some of those Trump tariffs have remained. So it's really not a question as to whether there will be tariffs in the Trump administration, but just how will he impose them and to what end.
Today was historic in that another US election was certified, and of course relative calm compared to some of the chaos that we're seeing in other democracies around the world. But of course, very, very different picture that we saw from 4 years ago.
Yes, it was a very kind of quiet, almost certification of the election, which is key to that peaceful transition of power. It was a snowy day here in Washington. The federal government was closed. There was really nobody on the streets. But Congress did convene, and they did, as is constitutionally required, certify the election results for President Trump. And interestingly, Vice President Harris, who had been his opponent on the trail, and she had to go ahead and act in her capacity as vice president to certify that election. She called it a sacred obligation, and stood while people cheered President Trump. But it was very peaceful. We did not see any of the violence that marred that date 4 years ago when a mob attacked the U.S. Capitol.
All right, Bloomberg's political news director Jody Schneider there. We have more ahead on the Asia trade. This is Bloomberg.
They're having trouble communicating how they're likely to react to the Trump policies. Obviously, if tariffs are broad-based, that is one effect. If they're much more targeted, as the Washington Post report suggests, that has a different implication. So there's a lot of uncertainty about what Trump policies are going to be.
Bloomberg Opinion columnist Bill Dudley on the impact of Trump's policies on the Fed. Joining us now is Nick Schoenmaker, who's a client portfolio manager at Drummond Capital. Happy New Year. Really great to have you with us early into potentially, it could be a very bumpy 2025 or even a bumpy first quarter.
It could be. So we're coming off 2 consecutive years of 20-plus returns. You know, we haven't really seen that for about a quarter of a century. I think we're going to have a relatively robust year for markets, but as you've alluded to, I think there is some policy uncertainty, whether it's Trump, whether it's fiscal and monetary policy. So I think the first quarter, as that all plays out, we'll see some volatility. We've seen just, long bonds selling off over recent days. We've had that 30-year yield approaching 4.9%. I guess we've got to try and figure out what the signal is. Is that concerns around supply? There's some big Treasury auctions this week. Is it concerns around inflation? And so there's a lot to work through. So I think it will be a very eventful year.
You mentioned longer dated treasuries and the path that we see. 10 years are not that far behind, right, when it comes to fresh highs. Our question of the day, when will the 10-year yield hit 5%?
Well, it's up about 50 basis points now, at about 4.6 from the beginning of December. So it looks likely that we'll get close to 5%. People talk about that being the danger zone, but you can kind of paint quite a positive narrative with renewed momentum in the US economy. Around Trump, you could see 5% being relatively healthy. We've seen it hasn't impacted earnings from mega cap tech yet, and we're still seeing Nvidia and the Mag 7 drive market returns, and more so recently. So it's not necessarily a bad thing. Obviously, over the last 2 decades, you've had falling interest rates and structurally lower policy rates being a boon for multiple expansion. So we do need to see earnings pick up. But if you look at the S&P 500 and the equally weighted index, they've both got earnings expectations for about 13%. So I think it's more of a worry if we got to 3.5%, because we'd be in recessionary type conditions. But given the momentum so far, it's probably, we could easily get to 5% over the next few weeks.
I want to get back to your market calls in a second, but just in terms of what to expect from the Fed, we've heard from Lisa Cook today, just reiterating this sticky inflation narrative.
Yes.
Market's still pricing in 2 cuts for 2025, but can you see a risk that it doesn't happen?
You absolutely could see a risk that it doesn't happen. Again, a lot comes down to inflation. We had disinflation the first half of last year, then sticky inflation. We've got core inflation in the US that's been stuck at about 3.3% for some time now. So we have to see, I guess, what happens with Trump and his policies. The US 10-year bond yield is going to be a very good barometer for how successful or otherwise his policies are. The market is going to have some input, I guess, into what Trump does, because one of his measures of success is a strong S&P 500. So there will be some moderation from the bond vigilantes to some extent. But we have to see what happens with inflation and whether a lot of Trump's rhetoric is negotiation versus application. You've just seen that Washington Post article, and then he's come out since saying that tariffs won't be watered down to be just national security. So we don't even know really how firm or not his policies are. So we'll have to see what happens after the 20th of January.
Yeah, we were discussing that a minute ago, that uncertainty almost seems to be a part of the game plan here. But
Correct.
Back to your market calls. I mean, you made a compelling case about the US, but do you look elsewhere? Are there Asian markets that you see opportunities?
Yeah, so the US, obviously, valuations are quite rich. But in the shorter term, whether you're looking at a year or 18 months, things like momentum, price and earnings momentum have a lot more of a input into returns than, say, value. What monetary policy is doing in terms of liquidity or otherwise, what central banks are doing, what sentiment's doing. So there is still good momentum behind US equities. Momentum, growth and quality were the biggest factors that drove the market last year. We did dip our toe into China after the stimulus last year, and it does look like there is going to be some bazooka-style fiscal policy that I think will probably exceed expectations, perhaps after they work out what Trump's doing with tariffs. So I think China's looking potentially interesting. Europe's got a hell of a lot of bad news priced in. We've just seen after Trump's and rumours around Trump being more targeted with tariffs that the euro bounced, the Mexican peso bounced, even the Chinese currency bounced. So there's a lot of bad news priced into Europe at a time where they've still got quite a lot of room to cut. I think Lagarde said after the 25 basis point cut in December, policy is still restrictive. So there could be some liquidity support there, but obviously the industrial manufacturing base in places like Germany has been very hard hit, and now we've got some issues again with gas prices rising. not to the extent that we've seen in 2022. But you do want to be very well diversified, but it's hard to, I guess, fight against US exceptionalism for now.
All right, Nick, thanks so much for coming in as always.
Thank
That's
you.
Nick Schoenmaker, Client Portfolio Manager at Drummond Capital. We have more ahead on the Asia trade. This is Bloomberg.
South Korea's corruption watchdog has filed for an extension of a warrant to arrest President Yoon after a first attempt last week ended in failure. The police, meanwhile, have rejected a request to detain Yoon, citing potential legal issues. Bloomberg Chief North Asia correspondent Stephen Engel is on the ground in a very chilly Seoul and joins us now. So this, a standoff and the tussle continues.
Yeah, that's absolutely right. And this is sort of the epicenter right now. And as you rightfully said, it has become a legal tussle back and forth. So it's a bit of a stalemate. A lot of the supporters of President Yoon, who, of course, have been holding out these placards, Stop the Steal, essentially have gone home for the evening after, of course, rallying here in the outside or inside the barricade as well of President Yoon's residence in central Seoul near Itaewon here. They've gone home, of course, because it is quite chilly here. They'll likely be back because at midnight last night, essentially, that arrest warrant which was issued a week ago on December 31st by the Seoul Western District Court had expired. Now we're hearing that investigators from the Corruption Investigation Office, or CIO, have applied for an extension of that. So that is a development we could get later today with the court either rejecting or extending that arrest warrant. And then the saga continues, because we all know, of course, that President Yoon, while he is said to be holed up in his residence beyond the barricades up the hill a bit, has refused any access to his residence by investigators. That's why the CIO had turned over the execution of that arrest warrant to the police. Now, the police deliberated, and then they essentially said, we're not going to take up that duty. Essentially, as I go back to that main premise, the legal ramifications could be greater for the police. So they said, essentially they want to take on that legal responsibility. So it's a stalemate right now. We'll have to wait and see how things play out today, if that extension of the arrest warrant is granted or not.
Stephen, of course, Antony Blinken was there in Seoul. He expressed confidence in the resilience of South Korean democracy. It's kind of interesting he felt he even had to say that just quickly.
Yeah, essentially he just reaffirmed, of course, the ironclad relationship that the United States has with South Korea, and then hailed that through this process it shows the resilience of democracy, and he's confident that it will play out in a proper way. He didn't weigh into it too much, other than to say that the United States and the South Korean government, whomever is going to be the leader, are in lockstep with regards to the stresses, obviously, and the provocations that come from North Korea.
All right, Bloomberg's Chief North Asia correspondent Stephen Engel there in a very cold-looking Seoul. We have more ahead on the Asia trade. This is Bloomberg.
Tencent's US-listed shares fell after the Defense Department labelled it a Chinese military business. The company says its addition to the blacklist is clearly a mistake. For more, let's bring our China correspondent Min Lo in Hong Kong. So, what was sort of the rationale or the contributing factors to this listing?
Yeah, well, for background, this is actually a blacklist that was created back in late 2020 when then President Trump wanted to prevent U.S. investments into any Chinese company that they say is controlled or owned by the Chinese military. So Tencent, along with other companies such as Odier Robotics, which is a Chinese drone maker, as well as CATL, the battery maker, has been included now in this blacklist, which doesn't actually carry any specific sanctions, but it does have the impact of discouraging investors from trading with these companies. And you can see last night the US ADR of Tencent falling by about 7.8%. And so this is a stock that we're watching very closely when it opens about 2 hours from now in Hong Kong, because if it falls by a similar size, it would really be the biggest decline that Tencent has seen in a year. And of course, this is the most valuable company in China. Market cap of $480 billion, is the second highest weighted stock in the HSI, just after HSBC. So any outsized move there will likely weigh on the broader index as well. And Tencent has put out a statement saying that this is clearly a mistake, that they do not engage or supply with the military, supply anything to the military. And it has said that it will be working with the Department of Defense to address any misunderstanding. We're hearing a very similar statement from CATL as well, saying that it is a private company that was taken public back in 2018, that they do not have any military-related activities, and that this is clearly a mistake. And we know the DoD did note in its filing that companies can request for reconsideration, and some companies have been able to get themselves off the list. And one example is Xiaomi. They got themselves off that list in 2021.
TikTok, of course, another Chinese tech company having some difficulties in the US. Their ban, of course, due to take place on January 19. But, well, TikTok creators aren't just good at creating content. They're getting quite creative at thinking of ways around this ban. What sort of trouble could this cause?
Yeah, so that ban is set to take effect on January 19, so about 1.5 weeks from now. But 3 days from now, on Friday, the Supreme Court is going to hear a challenge to the law that could potentially overturn it. But if it does not, then the tech companies like Google, Apple, they will have to remove TikTok from the App Store. And companies like Oracle, which hosts TikTok servers, they will have to stop hosting traffic from TikTok as well. That doesn't mean that it's illegal for individuals to still use the app, because the onus is really on the tech companies to comply with the law, or they could face billions of dollars in fines. And as you can tell, as you said earlier, on TikTok there has been a flurry of videos from social media users sharing how to circumvent that ban, either by changing their smartphone settings, for example, or using a virtual private network to make it appear as though they are accessing the app from another country where TikTok is not banned. And of course, there is a big uncertainty as well, and that is Trump's inauguration on January 20th. We know Trump has been calling for the Supreme Court justices to pause the law, and he has pledged to somehow thwart this law when he comes into office. So there's still that big question mark there as well.
Bloomberg's China correspondent Min Lo there. Take a look at one stock we're watching closely. Nvidia closing at a record overnight, close to retaking the top spot as the world's most valuable company. We did hear that the server assembly partner Honghai Precision, or Foxconn, reporting faster than expected revenue growth, really boosting kind of broadly chip and other tech stocks. Nvidia also in focus as we head into CES as well, right? That speech from Jensen Huang. But certainly taking a look at this company, very, very close to retaking the top spot as the world's most valuable company. At that last close, Nvidia has risen 194% over the last 12 months. Well, of course, investors looking to CES are looking for more upside in that share price, awaiting fresh comments from CEO Jensen Huang. He's set to speak in just a few hours at the closely watched event, the trade show in Las Vegas. Investors will be watching out for any commentary around the Blackwell chip, considered, of course, a major growth driver. Despite seeing robust demand, the chip has faced supply constraints due partly to manufacturing challenges. And Jensen Huang also joins Bloomberg Technology tomorrow for more on the company's growth strategy. That's at 11:30 a.m. in New York, the early hours of Wednesday, if you're watching in Asia.
Samsung Electronics says it's ramping up investment in AI for consumer electronics, trying to leverage its market share in gadgets to catch up in the new technology space. CEO Han Jong-hee told Bloomberg that the company will add AI chips in home appliances like refrigerators and washing machines, and it plans to expand its AI capabilities in TVs as well. Samsung shares fell last year as it failed to close the AI chip gap on compatriot SK Hynix. LG Electronics is partnering with Microsoft to use the US software maker's AI technology in its consumer electronics products. The two firms will collaborate on AI agents for various spaces, including homes, vehicles, hotels, and offices. LG has been using Microsoft's voice and speech technologies to power its self-driving AI home hub. And of course, AI has been the dominant tech trend since ChatGPT was launched more than 2 years ago, and it's a theme set to reign supreme in 2025, although it could take a different shape as new applications emerge. More from our Asia Tech correspondent, Annabelle Jewellers.
Chips, data centres, energy and spending from big tech. These have been some of the key metrics to understand demand around AI. Now the focus may broaden beyond infrastructure and chatbots to new uses, including scientific discovery.
I think scientists are starting to use it as a tool and apply it in their technology. And by doing that, there's probably going to be a lot more breakthroughs that you'll hear about. But I think that we have, from the public perspective, done a bit of over-indexing on large language models.
Indeed, 2025 could mark a further shift to small language models instead, especially as concerns build over the huge strains that AI is placing on power grids worldwide. That's putting the spotlight on a novel approach to training AI tools that could democratise access to cutting-edge technology.
The new machine learning paradigm will be so-called model over models. What we are talking about is actually a small language models targeting for specific domain. When this decentralized version populated, many more people, many more AI researchers, or democratize, more people will be involved. I think that's very important.
Such an approach could also be critical for integrating AI further into personal electronics like phones and PCs.
I actually would consider this technology to be the foundation for the future that people can have their personalized small language models.
At a device level, there's also set to be a greater focus on what's known as agentic AI, which refers to AI systems that exhibit agency or autonomy.
You're going to start seeing AI being able to do more multimodal, multi-capable things. And I think that the individual might start to feel that a little bit more. They might to see it in their product.
On the regulation front, President-elect Trump could mean less red tape for US tech giants, though that doesn't mean that any lead over China in AI will be sustained.
What we start to see is at the US level, this frontier area of where a select few companies are running away with it, and they look like they're significantly in the lead. But throughout 2024, in China, what we're starting to see is a lot of big, powerful models that are coming out in a more open source community, and the base of China is wider.
The race for AI supremacy in AI is by no means settled as we head into a new year. Annabelle Jewellers, Bloomberg News.
We are just getting some breaking news crossing the Bloomberg. Bridgewater Associates are cutting 7% of its workforce. We're hearing that dismissal of 7% of its workforce as the world's biggest hedge fund seeking to remain lean, maintain flexibility to hire more top talent. That's according to a person familiar with the matter. So that cut affecting about 90 employees, according to that source. Headcount is now back to where it was in 2023, but it will continue to hire selectively. A spokesperson for Bridgewater saying that for the last 3 years, they've been focused on rapid evolution, setting big goals and fiercely stopping at nothing to achieve them. But of course, we continue to watch for further confirmation as the Ray Dalio founded Bridgewater, now being led by the CEO, Nerida, posting double-digit returns for most of its strategies last year, including an 11.3% gain for its Pure Alpha Macro Fund. But now we're hearing that Bridgewater Associates dismissing 7% of its workforce. Some of the other stories that we're following from the corporate front. Meta is adding Ultimate Fighting Championship CEO Dana White and 2 other directors to its board, bringing on a high-profile campaigner for President-elect Donald Trump. CEO Mark Zuckerberg says the new members will help Meta take on the opportunities in AI, wearables and human connection. White is a friend of Zuckerberg's and also a vocal Trump supporter. Toyota says it's aiming to open a futuristic city at the base of Mount Fuji later this year. The company says the first 100 residents of the so-called Woven City will move in soon, mainly Toyota employees and their families. Woven City aims to be a living laboratory for testing and developing new technologies, but Toyota's chair says that it may never become profitable. Dell is rebranding its PC product lines, taking a page from Apple's labelling in a bid to revive weak sales. It's dropping decades-old names such as Inspiron and XPS in favour of a simplified Dell, Dell Pro and Dell Pro Max lines. Meanwhile, AMD says Dell will use its chips for some of its business computers for the first time in a blow to rival Intel. Shares of AMD rising while Intel slipping in the US trading session. McDonald's is no longer setting aspirational representation goals in a revamp of its approach to diversity, equity and inclusion policy. The company is retiring its DEI pledge in its supply chain and renaming its diversity team as the Global Inclusion Team. McDonald's cited the evolving landscape around DEI in the US as a factor in its decision.
Nippon Steel and US Steel have jointly filed lawsuits in a last-ditch effort to save their planned merger. The companies say President Biden's order to block the deal was made for purely political reasons. Japan's Prime Minister Shigeru Ishiba has also reacted, demanding that the US clarify what the security concerns are.
It is an unfortunate fact that Japanese industry has voiced concerns about future investment between the US and Japan. We strongly urge the U.S. government to take action to dispel such concerns. We need to have a clear statement as to why there are security concerns. No matter how much we are an ally, I believe that the points I have just made are very important for our future relations.
Senior energy reporter Stephen Stapczynski joins us now. Stephen, when we spoke this time yesterday, you said that this was heading to court, and here we are in court. So what are the arguments? What are the chances of success?
This is Nippon Steel and US Steel, sort of a last-ditch effort. They're saying that basically this became a political issue. CFIUS, which is the board that reviews foreign investment in the United States, found that they could not come to a decision on whether or not it was in the best interest. They said that there could be potentially security concerns, national security concerns. The Biden administration locked on that, and the White House blocked the deal just 72 hours ago. They say that that was an unfair review and that they weren't given enough time to respond to this. They also say that the Biden administration had come out against the deal before CFIUS even began their review, which pushed too much influence on their look at whether or not it would be in the best interest of the United States if Nippon Steel were to buy U.S. Steel. Now, the chances of this moving forward and actually being successful is quite slim. The president has wide-reaching powers when it comes to blocking these kinds of foreign M&A. And appealing it to the D.C. court, yes, it might be able to move up, but going to the Supreme Court, it's very unlikely that the Supreme Court would make a decision regarding something that is in the power of the executive branch right now. So all that together shows as quite unlikely. There's another lawsuit as well against other parties, including a rival steelmaker, as well as the U.S. Steelworkers Union, which they say colluded to provide influence against a U.S. trade representative, which also sits on the CFIUS board, to stop this from going forward as well. So we'll see how this pans out. But again, as I said, this seems to be sort of a Hail Mary situation for them, a last-ditch effort.
Yeah, and given the slimness of expectations of success or progress, what are the other options that are now on the table? What would be plan B, C going forward?
So for U.S. Steel, potentially some other purchase by another U.S. company, maybe some sort of guarantees from investors, or spinning off a smaller part of their company. Now, for Nippon Steel, the Japanese firm that's in our region, it's less clear exactly what they're going to do. They looked at U.S. Steel as a way to compete against China. China is the world's biggest steel maker. They've been flooding the market with cheap steel. And the alliance between Japan and the United States, very close allies, made a lot of sense in a business way. But now moving forward, Nippon Steel might have to look elsewhere, maybe even outside of the United States. Other growth markets that they've kind of pinpointed include Southeast Asia and India. They have a large operation in India. They have a JV there. They could try to expand that or look for other M&A opportunities within this region. But because of the difficulty with CFIUS, it might be unlikely that they'll look at other opportunities in the U.S. They had pinpointed the U.S. as one of their growth markets. They were really excited about it because the IRA had pushed forward potentially more investment in clean energy, which would require more steel. But because of the difficulties with the government, Nippon Steel might have to look elsewhere. And that's ultimately just bad news, not only for the United States, but also for the Trump administration, which, while they do oppose the deal, also wants investment in the United States.
Senior energy reporter Stephen Stapczynski there with the latest developments on Nippon Steel and US Steel. More ahead on the Asia trade. This is Bloomberg. All right, let's take a look at what we're watching when it comes to some of the currencies trading. A little bit of a tough start to the year when it comes to trading in the yen at the moment. We're seeing that sort of 157, almost 158 level. Some strategists saying that potentially that window between 158 to 160 could be kind of in focus now. We're always sort of on the watch for intervention risk at those levels, of course. Let's bring in Garfield Reynolds. He leads our Markets Live Asia coverage for more. So the yen, there was a lot of, I guess, optimism that it would be pretty stable in that fairly narrow range.
Yeah, well, I mean, the difficulty for the yen is that on the one hand, the drivers for US dollar strength over the short to medium term remain very solidly in place. That's a strong US economy, helping to keep yields high. Also, plenty of concerns that the Trump administration will lead to wider deficits. So that's both a concern from the point of view of the pressure that puts on yields to go higher with extra issuance, but also a stronger fiscal stance means more of that strong growth. So again, higher yields. Then there's tariffs that may or may not help to drive prices higher, bring back inflation. So all of that's working in favor of the US dollar, and the yen really is going to remain under the cosh unless and until the BOJ really shows a serious interest in not just hiking rates at some stage, but in laying out the idea that it will hike rates soon and then follow up, rather than at the moment, if they do get dragged into a rate hike, the expectation then would be that they would do, like last time, they hiked and then they stopped and talked about, whether or not this is the right way to go. And they definitely got some, sort of back chat from the government about, the Japanese government is nervous about the idea of rates going higher in anything like a rapid fashion because of what that might do to the economy, what that might do to their standing. So with all of that, the downside beckons for the yen. It was very noticeable that overnight when that report on the idea that the Trump administration might take a softer approach, at least initially with tariffs, that set off gains across a lot of currencies. Yes, the yen did gain, but it ended up lower at the end of the day.
Let's talk about the yuan as well, which is very weak, against the US dollar. So is that a US dollar story? Because against the G10 basket of currencies, the yuan has a somewhat different profile.
Yeah, well, I mean, the yuan in a lot of ways should be weaker against a range of currencies. And in fact, the PBOC's concerns about not letting it deteriorate too rapidly against the US dollar, that has meant that in fact it's ended up appreciating against the euro in particular and several other currencies. So to some extent, some of that overnight action where a range of currencies bounced back strongly against the dollar is a bit of a help to the yuan and to the PBOC in getting it sort of like more aligned with what it needs. The thing is that the yuan should be facing weakness. The Chinese economy, even after all the stimulus promises, even after some signs that some of the stimulus measures that have been taken are helping to at least ameliorate the situation there. The economy there remains weak, it remains fragile, and there's a lot of anticipation that there will be various both stimulative policy from the fiscal side of things, but also from the monetary side of things. So there's plenty of weakness baked in for the yuan. The question is against which currency does that manifest?
All right, Garfield Reynolds, who leads our Markets Live Asia coverage. Thanks so much for joining us. We have more ahead on the Asia Trade. This is Bloomberg. Australian Prime Minister Anthony Albanese has announced a $4.5 billion highway upgrade in an opposition-controlled state, which is, of course, fueling speculation that national elections may be announced very soon. Economy reporter Swati Pandey joins us now. So, Swati, is this part of an election campaign, and is this the start of many more announcements likely to follow?
Look, this is the start of the year, and it's very unusual for Australian prime ministers to come out and make major announcements. And given this is a big 7.2 billion Aussie dollar announcement in an opposition-controlled state, like you said, it has sparked speculation that this may be the start of an unofficial election campaign. And Albanese is in fact touring Queensland, where he made this announcement, Western Australia and Northern Territory this week. So it looks like a very busy calendar for holiday season. And he was asked about this as well, and he is not giving anything away. So he did not say this was part of election campaign. He in fact said that this announcement is not in a target seat.
Meanwhile, we're sort of taking bets on when Australians are likely to head to the polls.
The speculation is April looks like a possible month. Announcement for an election date will probably happen later this month after Australia Day, and then April is when we will head to polls. Australia needs to go to polls before middle May anyway, so if not April, it will be May.
Our Bloomberg economy reporter, Spati Pandey there, of course, and we are looking at a potential for even a hung parliament if we were to sort of head to the polls at the moment. So watching as we get closer potentially to that Australian election being called. This, in the meantime, is the picture when it comes to trading across Aussie assets. We're seeing a bit of upside when it comes to equities, about 0.5% higher. There are really gains in consumer discretionary, healthcare-related stocks as well, seeing some gains and tracking the rally that we saw in US stocks overnight, which of course was largely boosted by the likes of Nvidia, some of those broader tech and chip-making related names. Over in New Zealand, we're seeing not a lot of change when it comes to trading in Kiwi stocks there, and the Aussie dollar is a little bit of downside, 62.39. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens. And this, of course, as we continue to monitor a 2025 that started off with political turmoil really all over the world. We've been monitoring very closely and on the ground in Seoul, of course, as we wait for really the request to extend the validity of that arrest warrant, the police declining to handle that arrest execution as well. So that is ongoing. At the same time, of course, we've seen Justin Trudeau's leadership really coming to a close after what's been months of diminishing support and public opinion for what was, a person who was once the golden boy of Canadian politics.
Yeah, the end of an era after 9 years, and leaving perhaps with a mixed legacy as well. But on the political front also, the US election certification was reassuringly dull.
Yes.
No dramas there at all.
But a change from 4 years prior.
Exactly. Here we are with the Open in Japan.
Yeah, let's take a look at how we're coming online. About 0.7% for the Nikkei 225 as we get into the start of trading, and the top pick seeing some gains as well. We did get that a pretty strong handover from Wall Street as a little sort of return to dip buying, seeing another session of gains for the US, and in particular we did see that big jump for Nvidia really coming back to the fore as we await for the address by Jensen Huang at CES, of course, as well, which could potentially lend itself to even further gains there. But some of those chip makers and tech stocks really creating some broad leadership there. Here in Australia, we are seeing some pretty good gains there as well. Dollar yen at 157. It was a tricky start to the start of the year for the yen. That 158 to 160 kind of window is what we're seeing as a potential further weakness. And of course, then that gets us into potentially watching out for intervention territory there as well. But it's been quite sort of an interesting start to the year, particularly as, with volumes, things are still looking a little bit dicey with various slow starts to the year around the region. This is what we're watching when it comes to Korea. The Conisbee seeing a little bit more upside as we had futures closing up by 1.8%, looking like we'll continue to see kind of that rebound after just a lot of downward pressure both on Korean risk assets and also the won as a result of this ongoing political situation, which of course we still have no resolution. At the same time, we're also seeing kind of saber rattling from the north as well in light of Paul Antony Blinken's visit to the region.
Yeah, you mentioned Australia earlier. Not a bad day on the ASX so far, better by almost 0.5% after a very flat start to the week. Most sectors are in the green, materials looking kind of flat at the moment. The Aussie dollar got a little bit of a boost, courtesy of a slightly softer US dollar, but we did see the Aussie slide the most in 6 years last year. A lot of the action, though, in the bond space at the moment. We've seen US Treasury yields climbing, especially for those longer dated notes. The 30-year yield was up 5 basis points. There's a huge amount of US debt hitting the market, and that's really weighing on bonds. We've seen the 10-year rising about 50 basis points in the past month. That's the highest since May, and that's the Bloomberg question of the day today, in fact, is when will we see that 10-year yield hit 5%? Well, for more on markets, let's get to Homin Lee now, joining us from Singapore. Homin is a senior macro strategist at Lombard Odier. And Homin, we're seeing a reasonable start to trade in Japan. We had the Nikkei up about 16% last year. I know you're overweight Japan. What sort of gains are you anticipating in 2025? And are there any sector-specific stories that you like?
Well, we remain broadly constructive on Japan's economy in 2025. Growth will rebound pretty substantially from last year's. And if you look at the consumption indicators, they remain quite healthy, and the wage growth continues apace. So in our view, the domestic setup is pretty nice, and the country is quite well positioned in terms of friendshoring trends within the industrialized countries. And of course, there is the risk of a Trump tariff on the horizon, but compared to, say, competitors like China, the country might be able to avoid the most punitive form of tariff, and it does have its strategic industries that will likely do well in the medium term, getting greater share of the U.S. business. So the medium term and the short term pictures are pretty positive, and for that reason, we think the country's equity market will continue to perform pretty well this year. We think the dollar yen will remain a bit volatile in the near term because we need to digest the initial impact of Trump 2.0. But in the medium term, we think the currency performance will be a little more anchored by the likely policy normalization by the Bank of Japan. And even with that, given the positive picture on the macro front, we think the equity market will continue to deliver a bit of outperformance against the other developed markets and also emerging markets. So roughly, substantial outperformance is quite likely this year.
Now, I know in terms of yen and BOJ policy normalization, you see another tightening move from the Bank of Japan this month. Why is that? Why not March or potentially later?
So we do not rule out the risk of a rate hike happening in March, given the language from the Bank of Japan Monetary Policy meeting in December. We were initially thinking that they will move in December, but that didn't happen. Now, if you think about the domestic backdrop, wage growth is at the highest level since 1992. If you look at the business surveys, they're pretty strong. So our guess is it makes sense for the Bank of Japan to move actually this month, when it has the feedback on wage growth from the branch offices and also opportunity to update the macroeconomic forecast to strengthen the guidance for what the bank itself will do over the course of the year. So we still think January, this month, is the likely window for the BOJ's next move of 25 basis point hike. But if they delay to March, simply because they want to get more data, in our view, that would actually signal that they're willing to do even more for the rest of the year. Because the more you delay, the greater the positive impact from the weak yen will be for domestic inflation and wages and corporate profits. So this is roughly the outline that we have as we go forward. So January is the likely window still, in our view.
You don't seem super compelled either way when it comes to China yet. Is there any sort of catalyst that would potentially shift that position?
So the authorities are making right noises about the fighting the lingering risks in the economy. So the December policy meetings sent right signals about providing more support for consumers and also strengthening the social safety net. And of course, the main instrument the authorities will use will be the fiscal policy. We don't have the specific details yet, but roughly speaking, we'll likely get the confirmation of higher deficit targets and greater treasury bond issuance by the central government as we go forward. And those details will probably be provided in March. Now, what we need for the economy, however, is positive inflation, a cushion for domestic businesses. And for that, they really need to be able to use monetary policy. Now, we've gotten some signals from Beijing in that regard, but that's not terribly different from the gradual changes in the monetary policy framework that the authorities have been engaged in for many years now. So if the authorities are not willing to accept the possibility of more open capital accounts and more flexible FX exchange rate for the yen, then we think ultimately we'll just get a limited version of monetary easing and some fiscal easing down the road. So that's the risk we're dealing with. It's a framework question. It's not really about some specific perfect technical solution. The framework needs to change, and we're not still there yet. So in absence of this, we think what we can do with the market is to simply stay neutral versus emerging market benchmark. And this is what we're doing still. But we'll have to see what signals come out before the two sessions in March.
How are you feeling about sort of AI chip tech related names in Asia? And do you have a preference if you're looking more towards Taiwan or South Korea?
So we're more balanced between Taiwan and South Korea. We'll see what NVIDIA says, Jensen Huang says, in a few hours' time regarding their strategy for Blackwell, and eventually the medium-term strategy for accelerating the evolution in the entire AI chip space. But for us, it is true that 2024 was a banner year for chip demand, and you will likely see a bit of normalization in demand just in terms of growth rate for the industry in this year. But still, the landing zone for growth will be pretty high for many of the hardware suppliers in Asia, especially in the semiconductor sector. So Taiwan is still very strongly positioned for all the cutting-edge AI tech development. South Korea is a more interesting case. The foundry business is struggling quite a bit, and we assume that it's not going to be a serious competition for Taiwanese suppliers in the medium term, but that's probably in the price. But what matters more is that if there's a significant demand and enthusiasm for the next generation of AI chips, the high bandwidth memory business for South Korea could still be an opportunity. And this is what we're already seeing in the export numbers of the country. So what we think is the country South Korean market could potentially provide that optionality for some positive surprises in the semiconductor sector this year. And this is the reason why we're still willing to be patient with the market for the time being.
Homin Lee, Senior Macro Strategist at Lombard Odier. Always great to chat with you. And Homin mentioned, of course, we're watching NVIDIA very closely because not only did it reach that record high overnight, it's also very, very close to reclaiming that position as the world's most valuable company. We are seeing some of that follow through, of course, when it comes to Asia tech. Samsung Electronics seeing some pretty good gains there, 1.25%. Tokyo Electron up by over 5.25%. A lot of these names will potentially, investors also adjacent to this watching out for the NVIDIA CEO Jensen Huang's expected speech at the CES trade show in Las Vegas. Of course, a lot of hope for commentary and details around the Blackwell chip. Of course, that's a major growth driver that all NVIDIA and chip investors have been watching very closely, Paul.
Let's check in on Nippon Steel as well, losing ground in Tokyo at the moment, off by a little bit more than 1%. Of course, the Nippon Steel and the United States Steel have now filed two lawsuits to challenge President Biden's block of that planned merger. One is arguing that CFIUS failed to consider the deal on national security grounds. The other is actually a lawsuit against rival steelmaker Cleveland-Cliffs. But the chairman says Nippon Steel's chairman says they see a chance of winning the lawsuit, although we did speak to our reporter Stephen Stapczynski a little bit earlier, and he suggested given the strength and wide-ranging executive powers of the president, this lawsuit could struggle in the court. We have more ahead on the Age of Trade. This is Bloomberg.
Take a look at what we're watching when it comes to Korea assets, as of course the political uncertainty continues to play out in Korea. We've had that application to extend the arrest warrant. We've also had the police declining to handle the execution of that arrest as well, citing concerns over potential legal issues. The president's legal team continues to say that he will not cooperate and may take further legal action. So despite all of that, we're seeing that rebound really continue to take hold when it comes to Korean stocks. Perhaps the value proposition is really pretty strong there, and a lot of people have been sort of hoping that we'll see a faster resolution of the political situation, which of course continues to play out. We are seeing some of those tech names broadly getting a boost by the record high being hit by Nvidia overnight, and also some pretty high hopes going into the CEO Jensen Huang's speech expected at CES in Las Vegas as well. South Korea's corruption watchdog having filed that extension of the warrant to arrest President Yoon Suk-yeol after a first attempt last week ended in failure. The police, meanwhile, have rejected a request to detain Yoon, worried about these potential legal issues. Bloomberg's chief North Asia correspondent Stephen Engel is in Seoul. So, Steve, this standoff and uncertainty continues to play out. What are we watching out for next?
Well, what we're watching out for next is whether the CIO's application for an extension of that arrest warrant, which was issued a week ago and expired at midnight last night, and that's yet to be seen, and whether, of course, the CIO, which is the Corruption Investigation Office, which, by the way, was set up in 2021 to kind of decentralize the operations of prosecutors, give it a little bit more transparency, but it's sort of become a bit of a lightning rod, of course, for Yoon supporters who say it doesn't have the legal legitimacy to carry out what it is trying to do. And the justification for that arrest warrant essentially is insurrection. But again, Yoon supporters are saying of the crimes that the CIO is by law enabled to investigate, insurrection's not on that list. There is a clause, though, that say they can investigate abuses of power. But again, we're getting into semantics, legal semantics, that the Yoon camp is saying one thing, and then, of course, the investigators and the prosecutors and the Democratic Party, the main opposition party, are arguing otherwise. But we're outside the residence, the barricades that lead up to Yoon's residence, where we assume he is holed up there. And of course, supporters of President Yoon have been holding these placards. First thing any reporter does when they come to a protest site, they go rummage through the garbage, because these are from last night. There are hundreds and hundreds of them all around the place. The protesters have gone home. They're probably going to be starting to show up now that the sun is up and the temperatures are coming back up. So it's a bit of a stalemate right now as we're awaiting the court's decision on that extension. And also, again, on January 14th is when the Constitutional Court will begin the trial to judge whether that impeachment that happened in the National Assembly is warranted, and that could potentially lead to the ouster or actual exoneration of President Yoon.
All right, Bloomberg's chief North Asia correspondent Stephen Engel there in Seoul. Well, Canadian Prime Minister Justin Trudeau is resigning after more than 9 years in power, and he's bowing to sagging approval numbers as well as a rebellion within his Liberal Party.
I intend to resign as party leader, as Prime Minister, after the party selects its next leader through a robust, nationwide, competitive process. Last night, I asked the president of the Liberal Party to begin that process.
For more, Bloomberg's Vancouver bureau chief Thomas Seoul joins us now. So, Thomas, the process to select a new leader of the Liberal Party will now begin. Who's that leader likely to be, and are they going to have any chance of winning an election likely within the next few months?
Yeah, they've got an uphill battle for sure. There's quite a competitive field emerging from names that are circulating and people we're hearing about. But a lot of them are linked to Trudeau, and so they would have to somehow run while justifying their record in his cabinet. So people like his longtime deputy, Chrystia Freeland, who was also his finance minister, previously other senior roles. She resigned dramatically last month and really set off the chain of events that have led to Trudeau's resignation today. Other possible cabinet members who could run for the leadership include Dominic LeBlanc, who is Freeland's replacement as finance minister, a childhood friend of Justin Trudeau. People who aren't in the cabinet who people are talking about include Mark Carney, who was the governor of the Bank of Canada, then the governor of the Bank of England. He's an advisor to the Liberal Party now. But as you say, the polls make it very difficult for them to come back. Whoever takes over as the Liberal leader and the Prime Minister of Canada will immediately become Prime Minister, and then they will almost immediately face a vote of no confidence and an election. It's the Conservatives to lose, judging by the polls.
You know, some of the factors that led us here seem not perhaps specific to Trudeau. Cost of living crisis, that's really a worldwide issue, maybe a loss of momentum for, having been in power for almost a decade. But was there anything specific that got us here, given that he was really, for a very long time, sort of the golden child of Canadian politics?
Yeah, you're quite right. There's a generalized backlash because of inflation, which has hit incumbents around the world. But some specifics that have hit Trudeau, I think, have been, things that his own allies, former allies, have criticised him for. Freeland's resignation letter in December accused him of using, quote, costly political gimmicks. And these, I think, were as a coded reference to tax breaks, handouts. And she said that the country needed to save its fiscal firepower for the prospect of a trade war with Donald Trump, who obviously takes office in 2 weeks' time, and it's by far the biggest trading partner for Canada. So there's a sort of implied lack of seriousness, maybe lack of gravitas, or sort of grasping the situation that Canada finds itself in with a president-elect who is almost daily issuing taunts over social media, calling Canada the 51st state and joking or not about annexation.
Bloomberg's Vancouver bureau chief Thomas Seoul there with the latest. And US President-elect Donald Trump has denied a Washington Post report that he might moderate his plans for tariffs. Well, when he retakes the White House, Trump has promised 10 to 20% across-the-board tariffs on all imported goods and a levy as high as 60% on Chinese goods. The implementation of Trump's tariff plans could still face legal challenges and congressional opposition. More ahead on the Asia trade. This is Bloomberg. Investors are hoping for more upside in Nvidia shares as they await fresh comments from CEO Jensen Huang. He's set to speak in a few hours' time at the closely watched CES trade show in Las Vegas. People will be looking out for any commentary around Nvidia's Blackwell chip, of course considered a major growth driver going forward. Despite seeing robust demand, the chip has faced supply constraints due partly to manufacturing challenges. Paul.
Well, AI has been the dominant tech trend since ChatGPT was launched more than 2 years ago, and that's a theme that's set to reign supreme in 2025, although it could take a different shape as new applications emerge. We've got more from our Asia Tech correspondent, Annabelle Drawlers.
Chips, data centres, energy and spending from big tech. These have been some of the key metrics to understand demand around AI. Now the focus may broaden beyond infrastructure and chatbots to new uses, including scientific discovery.
I think scientists are starting to use it as a tool and apply it in their technology. And by doing that, there's probably going to be a lot more breakthroughs that you'll hear about. But I think that we have, from the public perspective, done a bit of over-indexing on large language models.
Indeed, 2025 could mark a further shift to small language models instead, especially as concerns build over the huge strains that AI is placing on power grids worldwide. That's putting the spotlight on a novel approach to training AI tools that could democratise access to cutting-edge technology.
The new machine learning paradigm will be so-called model over models. What we are talking about is actually a small language models targeting for specific domain. When this decentralized version populated, many more people, many more AI researchers, or democratize, more people will be involved. I think that's very important.
Such an approach could also be critical for integrating AI further into personal electronics like phones and PCs.
I actually would consider this technology to be the foundation for the future that people can have their personalized small language models.
At a device level, there's also set to be a greater focus on what's known as agentic AI, which refers to AI systems that exhibit agency or autonomy.
You're going to start seeing AI being able to do more multimodal, multi-capable things. And I think that the individual might start to feel that a little bit more. They might to see it in their product.
On the regulation front, President-elect Trump could mean less red tape for US tech giants, though that doesn't mean that any lead over China in AI will be sustained.
What we start to see is at the US level, this frontier area of where a select few companies are running away with it, and they look like they're significantly in the lead. But throughout 2024, in China, what we're starting to see is a lot of big, powerful models that are coming out in a more open source community, and the base of China is wider.
The race for AI supremacy in AI is by no means settled as we head into a new year. Annabelle Drulers, Bloomberg News.
Let's take a look at some of the movers across Asia Tech today, and of course that broad lift coming through from Nvidia hitting a record high in the overnight session and being very close to reclaiming its position as the world's most valuable company. Of course, heading into that Jensen Huang speech at CES, investors will be hoping for further upside. We are also seeing upside sort of with some idiosyncratic stories across Samsung as well as LG as well, right? Samsung touting broad AI for gadgets. And we're seeing upside across the board. Tencent's US-listed shares fell after the Defense Department labelled it a Chinese military business. The company says its addition to the blacklist is clearly a mistake. For more, let's bring our China correspondent Min Lo in Hong Kong. So, Min, talk to us about sort of the history and the background of this list and how Tencent found itself on it.
Yeah, so this blacklist was first created back in late 2020 when then President Donald Trump had wanted to stop U.S. investments into any companies that are controlled or owned by the Chinese military. And it looks like now the Department of Defense is listing a number of additional companies in that blacklist, including Tencent, which is a social media and gaming company, as well as drone maker Odier Robotics, as well as CATL, the battery maker. And there you see the U.S. ADRs dropping by about 7.8%. Certainly some level of market panic setting in, and we're watching this stock very closely when it opens in Hong Kong about an hour from now, because this is the most valuable company in China, a market cap of about 480 billion. It is the heaviest weighted stock on the MSCI China, so any outsized move there will likely drag down the broader index benchmark indexes here in Asia as well. And the big question is whether Tencent can recover from this, because there has been instances in the past, for example, Xiaomi or Hesai, the LiDAR technology for smart cars, they have been able to get themselves off that blacklist. Tencent, for one, has issued a statement saying that this is clearly a mistake. They do not engage in any sort of military activity, and they will be working with the Department of Defense to clear up this misunderstanding.
Well, of course, the TikTok ban also comes into effect in the US January 19, but we're discovering that there might be some ways around it, particularly for anyone with a virtual private network. What are the implications here for Apple and Google?
Yes, so on TikTok, you can see now that there are so many social media videos that are being shared, content creators sharing ways to circumvent this potential ban that could kick in on January 19 if it isn't overturned in this court hearing this Friday. And one of the ways could be changing your smartphone settings, or as you said, subscribing to a virtual private network to make it appear as if you're accessing the app from another country that doesn't ban TikTok. But that is actually still somewhat a gray area, kind of legal in some ways, because the law actually places the onus on companies, tech companies, to comply with this rule. So companies like Google, Apple, they have to remove the app from the App Store. Companies like Oracle, which hosts TikTok server, they have to stop hosting the app's traffic as well. And analysts are saying that even if this law is not fully enforced to the full extent, it could still deal a slow blow to TikTok, because when TikTok is not able to offer bug fixes or updates to the app, they could slowly start to see users sort of drop off the app and could die a slow death over the long run.
All right, Bloomberg's China correspondent Min Lo there. Well, some news we're following from China's property sector. Sunac China shares tumbled in Hong Kong after it reportedly told some of its dollar creditors it's unlikely to meet a September bond maturity deadline. Reuters cites sources saying the company will explore options for the maturity as uncertainties over the sector recovery weigh on repayment efforts. Meanwhile, Logan Group says it has reached agreement with some offshore creditors over a term sheet for its offshore debt restructuring proposal. The statement to the Hong Kong Stock Exchange says the proposal aims to relieve debt burden and restore the capital structure. Logan owed about $8 billion offshore as of Monday. Well, even as Beijing vows to stabilise housing prices, developer China Vanke remains in an uneasy spot. Some investors are worried the country's largest privately held builder is getting near the end of the road. Bloomberg Opinion columnist Shuli Ren joins us to explain why she thinks Vanke's year of reckoning is finally here. So, Shuli, can you walk us through the logic?
So, Paul, on its own, the market consensus is that China Vanke cannot survive by the end of this year. It's facing a steep maturity wall. About $5 billion US dollars of corporate bonds will be due sometime this year versus just over $1 billion last year. And the Vanke doesn't have enough cash to cover short-term debt as of last June. So now the question is whether Beijing still considers this company to be important enough that it will keep helping coming to its aid. And I'm afraid that the industry dynamic has changed a little bit since last year. I mean, these days, consumers in China, they have already faced a new pecking order. If they want to go to the primary market and buy brand new apartments, they will go to state-owned developers like China Overseas Land and Investment. And they can also dabble into the secondary market, buying existing homes, which are a little bit cheaper. So at this point, versus 1 year ago, people don't really care about Vanke anymore. And I'm just afraid that Beijing will say, okay, no private enterprise in China is too big to fail, and they will just let it go.
You know, to a lot of people, cutting housing inventory is really key to kind of solving the whole economic malaise, or at least a big driver of it, right? What's stopping Beijing from being willing or able to do that?
Yeah, I think, unfortunately, politics is at play. I mean, we have seen the Logan, Sunac, and Vanke, all these developers, they will benefit a lot more if Beijing just says, okay, I'm going to mop up excess supply, buy off the land that you have not used and the apartments that you have not sold. But we know, like, especially in smaller cities, there have been no land transactions or new apartment sales has been very weak, right? So local officials don't really have market prices to look up to. And then it comes down to what would the repurchase price be from the government viewpoint. And since President Xi Jinping, he's doing anti-corruption drive, later on down the road, the central government can say, okay, you bought this plot of land at an exorbitant price, and there's corruption inside. So no local officials are willing to stick their head out and say, okay, I'm just going to mop up excess supply in this market. They're just not willing. They're just not willing to do that.
Shirley, always great to chat with you. Shirley Ren, who's a Bloomberg Opinion columnist there. Some of the other stories that we're following on China, and Chinese President Xi Jinping says the country must prevail in the fight against corruption. He made the comments at an annual meeting in Beijing. According to Xinhua, Xi also called the graft the biggest threat facing the ruling Communist Party. The Chinese leader's anti-corruption campaign has caught a record number of senior officials over the last 2 years. French President Emmanuel Macron is warning that Iran's nuclear program is nearing the point of no return. He says Iran is the biggest security challenge facing Europe and its allies. Last month, Tehran announced it would increase its nuclear fuel-making capacity. Iran has maintained its nuclear development program is for energy purposes. Given the big moves that we've seen in US yields, this is a picture across APAC as we track the bonds here. And of course, that 14-month high in the US really continuing to drive some of the moves that we see across the region. The yield on 30-year treasuries in particular climbing to the highest in over a year. And we are seeing that pretty quick catch-up when it comes to 10-year yields as well, which of course lends itself to the question that we pose in our question of the day as well, is when will we see 5% for 10-year yields, certainly on the path to fresh highs, and we could perhaps see that in the coming weeks. Supply pressure at play here, soft demand, competition from some corporate offerings, as well as, of course, these broad-based concerns over trade protectionism and inflation at play there as well. Well, the former New York Fed President, Bill Dudley, says the US central bank's messaging is still falling short. He told us that policymakers are not aligned on the potential impact of President-elect Trump's threatened policies on trade and immigration.
I think the summary of economic projections last month was confusing to people because there was a pretty big upward revision to the inflation estimates for 2025, yet it was hard for Powell to explain the sources of that. He noted that the participants don't operate from a common set of assumptions. Some were assuming effects of Trump tariff and deportation policies, some weren't, and some didn't say whether they were or weren't. So each of the projections has a different set of assumptions embedded in it, which makes it very hard to anticipate what the Fed thinks is going to happen and how they're going to react to it.
Bill, is the issue for the Fed right now communication or just not necessarily understanding which direction this economy is going to go in?
Both. I think the problem is they're having trouble communicating how they're likely to react to the Trump policies. Obviously, if tariffs are broad-based, that is one effect. If they're much more targeted, as the Washington Post report suggests, that has a different implication. So there's a lot of uncertainty about what Trump policies are going to be. And of course, the Fed is, uncertain about how the economy itself is going to perform. A key issue for the Fed in terms of the economy is the labor market going to continue to weaken or not? Powell has been very clear that he thinks the labor market is still weakening, and he doesn't want it to weaken any further. So that's why Friday's payroll employment report is so important.
When you talk about a reaction function, this has been one of the big quagmires for people. What is sort of the scenario analysis that the Fed is doing and how they're going to respond to it? Do you think that they have that scenario analysis, or do you think that increasingly by default it is becoming an increasingly data point dependent Federal Reserve?
Well, there's definitely scenario analysis that takes place before each meeting. The staff prepares the so-called teal book, and in the teal book, there's a baseline forecast, but there's also these alternative simulations, which suggest how the economy might evolve if things happen differently. I think that's another problem with the summary of economic projections. It's a modal forecast, and it doesn't talk at all about what could happen if things turn out differently than what Fed officials expect. So I think one thing the Fed could do is actually do what a lot of foreign central banks do, is actually have a consensus forecast. Difficult to do with a committee with 19 people spread all over the country, but you could actually start to publish the staff forecast. There is a staff forecast available before every meeting, and if you put that out there, you'd have a better sense of, what the baseline assumptions of the Fed are.
But Bill, isn't one of the issues that calms problems is because they don't want to or can't be seen talking about policy? Do you just think the Fed should be more open about policy, all of the members?
Well, clearly what happens on tariffs and deportation is going to have a big effect on the economy in 2025. So I don't think you can avoid, thinking about that in terms of making your economic forecast. I think the Fed is reluctant to talk about it because he doesn't want to get itself engaged into this political discussion. And I think they're worried that will politicize the Fed. So they're trying to think about it without talking about it at the same time.
Is your main concern right now with the Fed communications, or would you do anything differently on policy?
I think they are in a pretty good place right now. I think that they understand that the economy is doing okay. Inflation is a little bit sticky, so it makes sense to wait. They also understand that there's a lot of uncertainty about what policy is going to be forthcoming. And Powell said when things are uncertain, you should slow down. So I think that all makes a lot of sense.
Former New York Fed President Bill Dudley there speaking to Bloomberg Surveillance, and certainly this move when it comes to longer-term US yields is moving what we're seeing across JGBs at the moment as well. Japan's 30-year yield rising to 2.32%. That is the highest since 2010. We've seen that move higher when it comes to the 10-year yield there as well, hitting the highest since about July 2011 in the previous session. Futures had been trading a little bit down going into this session as well. That market had been subject to some selling ahead of a 10-year debt auction on Tuesday. We've seen that weakness from the yen as well from these rising US long-term yields as that yield on the 30-year US Treasury climbed to the highest in over a year. And certainly the yield on the 10-year is pretty on path to some of these, the move towards potentially 5% in the coming weeks. Broadly, that rise in yields expected to continue. Some expecting that 5% mark to come from the US 10-year yield pretty quickly, and that's already, as we see, playing out across other asset classes, stocks and FX as well today. More ahead on the Asia trade. This is Bloomberg. We saw Australian house prices declining in December for the first time in 22 months. Data provider CoreLogic says the biggest markets of Sydney and Melbourne led those declines. High interest rates, increased supply, weakening broader demand. Joining us now is Nerida Conisbee, who's a chief economist at real estate group Ray White, for a look at what's to come in 2025. And, it's interesting, there is some softening, some cooling, but it's such an inconsistent market depending on which suburb or which city you're looking at.
Yeah, it absolutely is inconsistent. If you have a look at Melbourne at the moment, Melbourne and Hobart are our two weakest markets. Hobart a bit to do with the fact that population has really slowed to a grinding halt. Melbourne has a lot of additional taxes, which is really impacting buyer demand. Head across to Perth though, and you're looking at very different conditions. So it has slowed. We were looking at around 25% annual growth up till mid-year. It's now looking at about 19%. Southeast Queensland is still continuing to attract a lot of people. Adelaide as well. So they are slowing, but they're moving at a very different rate.
Where are we seeing more supply or potentially even oversupply at the moment?
The supply issue is interesting. I mean, most of it is on the urban fringe. So if we have a look at houses in particular, increasing construction costs have impacted the rate of development, but they have been able to get a lot of projects up and running, primarily because planning controls have been weakened to try and get more supply into those regions. Apartments at the moment, though, we are seeing very little development. So we're still seeing a lot of approvals taking place. There is a big push from the federal government to try and get more apartments built, but if you talk to any developer at the moment, the cost of developing is very expensive. The cost to develop cheaper apartments in particular is a problem.
Is there a supply issue on the apartment side, though? Because Melbourne has a tremendous amount of apartments. We see construction cranes everywhere in Sydney. Is this a matter of people just not wanting to live in apartments? Are they all full?
Well, it is a little bit to do with people not wanting to live in apartments. I mean, if you have a look across Australia, we're not used to it. We do like big family homes. We do need to get used to apartment living because average household size is shrinking, and the biggest increase in family type will be single-person households. At the same time, though, Melbourne does have a lot of apartments. A lot of them are full of students in particular, if you have a look at inner Melbourne. But head to places like Queensland, particularly Brisbane, Gold Coast. We are seeing faster price growth for apartments than we are seeing for houses. So what we're seeing in those areas, particularly luxury apartments, are still being built and still being demanded. A lot of downsizer activity in those sorts of projects. But again, coming back to affordable apartments, anyone looking for an affordable apartment to rent on the Gold Coast or in Brisbane is finding it really difficult at the moment.
Yeah, you mentioned students there, and that did shape up as a plank in the immigration debate because, of course, it's strong immigration that's been driving the population growth, been driving a lot of the demand. We're heading into an election year. Can you see that potentially changing?
Look, the student numbers have been interesting. I mean, if you have a look through COVID, it did lead to significant drops in rents in some markets, not all markets, but inner Melbourne really stands out as one market that we saw big declines. When students came back, obviously they filled up again, but at the moment Melbourne rents are starting to soften quite significantly because student numbers are pulling back. But at the same time, we are seeing less investment in activity, so the number of rental properties in Melbourne has actually declined quite significantly. So it is going to be a really interesting year, not just for student numbers, particularly for states that do rely on international students, but also for the housing market.
How quickly do you expect things to change once the RBA finally starts to embark on easing?
Well, we've had a look historically at what happens, and it is quite immediate that we see places like Sydney and Melbourne particularly jump quite quickly.
That's just a confidence boost, right?
Yeah, it's a confidence boost, but also a capacity issue. I mean, if you're looking to buy in Sydney and you could only afford $1 million and rates are cut, then that your ability to borrow a little bit more is increased. So it does make a difference, definitely, to how people are feeling about the housing market, but also their borrowing capacity does increase quite significantly when markets are super expensive.
You say only $1 million. It seems weird to have those words together in the same sentence, doesn't it?
I grew up in Adelaide. I mean, it's $1 million gets you a lot in places that are not Sydney.
Yeah, I mean, it is interesting. I mean, Sydney is extreme. I mean, I think it's second or third most expensive, or least affordable city in the world. But yeah, go to Adelaide and the median's half that of Sydney, and you can see why places like Adelaide are attracting a lot of people because they are so much more affordable.
What are we seeing from foreign buyers? I mean, clearly with the slowdown in China, it's probably a different demographic now. What's your experience been?
Yeah, look, it is very different. I mean, we are continuing to see a lot of buyers from Hong Kong, also Singapore. Like they tend to be the two, but they're no match to what happened with Chinese buyers. If you have a look back at the end of last decade, most development of apartments in particular wouldn't have taken place without that huge level of investment. So it is a challenge for Australia. I mean, we do rely, or we have historically relied heavily on foreign buyers to provide a lot of rental housing. We don't have that money here in Australia at the moment, so it doesn't, it does make quite a negative outlook for renters when we don't have a lot of rental properties becoming available. The
prices in Australia are, of course, sky high, and a lot of people have staked their reputations and lost them, calling for a correction. Is there ever going to be one?
Look, we always do see corrections, but every cycle we see the 30%ers come out and say it's going to drop by that amount, and it never does. I mean, we do see declines in Australian property prices, but they do tend to be quite mild. I mean, we are a country that does welcome immigration. We're not very good at building. We love living in big homes, so all of those things do make it structurally a market that does remain very expensive.
What if you get rid of negative gearing?
Yeah, look, it is an interesting one. I mean, it's interesting. I mean, the challenge with negative gearing is that it also does provide rental housing. So, absolutely we need to be looking at taxes all the time as to what their impacts are on housing. But, yeah, negative gearing is a very emotional tax, and a lot of people rely on it, renters rely on it, but at the same time it is likely to lead to much higher pricing than we otherwise may have seen with that alternative taxation.
All right, Nerida, thanks so much for joining us. That is Nerida Conisbee, Chief Economist at Ray White. We've got more ahead on Australia Ahead. That's every Tuesday, 11:40am if you are watching in Sydney, 8:40am in Hong Kong. Plus, you can tune into the Bloomberg Australia podcast, which delves into the biggest stories shaping the country's role in global business. You can find it on Apple, Spotify, or Bloomberg.com. More ahead on the Asia trade. This is Bloomberg. Let's check in on how Nippon Steel is tracking in Japan, off about 1.5%. Of course, the company has filed a petition along with US Steel to the Federal Appeals Court in Washington. It says that CFIUS didn't consider the deal on national security grounds, arguing that the blocking of the deal was for purely political reasons. But we've had a few more comments from the Nippon Steel chairman today, saying that the US is crucial to the company's global security. Nippon Steel, though, saying it's not considering any alternatives to the US Steel deal, Haidi.
Yeah, and we are seeing really that reaction in Japan when it comes to the bond market from the move in the US 30-year yield as well, right? We've just seen that 30-year yield for JGBs rising to 2.32%. That's the highest since 2010. Across the curve, really, 5-year yields rising to the highest since June 2009, along with the 30 as well as the 10-year yield climbing to its highest since July 2011, ahead of the auction of the debt today as well. So these moves that we're seeing, in particular, even on the shorter end, 2-year yields running about 37 basis points above the policy rate, and that kind of gives us the window of what could be enough of a cushion for central banks in that G10 space to move ahead with the interest rate hike. So March is kind of where it is looking at the moment, but some pretty big moves. 5 years as well, climbing to the highest since 2009, Paul.
Well, it's time to check some of the stocks to watch when markets open in Hong Kong and mainland China. Keep an eye on Tencent and CATL after the US Defense Department added the two companies to a blacklist as Chinese military companies. The listing does not carry specific sanctions, but may discourage US firms from trading with those companies. And that is it from the Asia Trade. Markets coverage continues as we look ahead to the start of trade in Hong Kong, Shanghai and Shenzhen. The China show up next. This is Bloomberg.